Welcome back to Market Day Report. I'm Chris Swift. Let's see how the grain markets have been trading here. They've been all over the place so far this morning, but not in a very big range. Still showing some plus signs on the corn. 472 up 2.25 on the March contract. May up 2.5 at 485 even. Out to the July contract up 2 at 494.5. Soybeans have been a little bit softer, and let's see, we're down 10.25 on the January soybeans, 12.98.25. March down 12.5 at 13.03.25, and the May contract down 12 even, 13.14.75. In our Chicago wheat this morning, it had been a little bit firmer and still is. We're up 4.25 on the March, 6.14.25. May down up 4.5 at 6.25.75, and the July contract up 4.25, 6.32.25. In our hard red winter wheat, Kansas City down 2 on the March at 6.23 even. May down 3, 6.26.75. July down 3.5 at 6.31 even. And we'll wrap it up with Minneapolis spring wheat down 3.5 on the March at 7.14.5. May down 3 at 7.24.25. July unchanged on the day, 7.35.5, about a quarter off the low. I've got Ted Seifried in with me this morning. He's with Zaner Ag Hedge. And Ted, we've all discussed of how slow the market is right now, but give us something really exciting to look forward to for the rest of this week.
Man, I don't know if there's anything really exciting to look forward to aside from, if you're properly hedged and you've got a lot of sales made, then the last couple of days have felt pretty good, I guess. We continue to watch Brazilian weather. We continue to talk about how bad Mato Grosso is, but the soybean market doesn't seem to care. And I think a lot of that stems from what's going on with export sales. 1.9 and change million metric tons last week for our weekly export sales is pretty good, but it's not barn burning, right? It's not 2.5, 3 million metric tons. It's not bigger than average, right? And so unless you get the global end users, and China in particular, worried about the Brazilian weather or worried about whether they're going to be able to source their soybeans, it's really tough to get the market excited about that too. And from a technical standpoint, this is your third down day in a row for beans. You broke out below the 200-day moving average. This is actually the lowest we've traded since October. We had support right around 13.10. We broke through that too. Chart's not looking good. Price action not feeling good. I will say you're getting a little oversold, so you could see a corrective bounce at some point to go back and test that 20-day moving average, 200-day moving average, which is now resistance. But yeah, you really don't like the look of that chart. And then corn, same thing. Corn, new contract low in the March contract yesterday, new contract low close both yesterday and the day before. Yes, we're up 2 cents today. It's nice to see a little bit of a bounce. But it's, we had 3 down days in a row. Technically speaking, you needed to see a little bit of a bounce. And it's so far not that impressive. You really would like to see more out of corn here today.
Sure. And so the soybean meal market, we know that we had seen it slip now back under $400. Argentina still has plenty of beans, to the best of my knowledge, and are going to have beans. Is that what's weighing the pressure on the meal?
Yeah, Chris. That's a big part of it. Brazil's crushing a lot, too. Brazil's actually ended up picking up more of the slack from Argentina than we have. Yes, we've done some of that, but Brazil, the number 2 crusher in the world, has really taken a big portion of our spotlight on that. And the other thing is, what's demand look like going into next year? We know we don't have a ton of animals out there, comparatively speaking. So, just across the board, everything, the whole soybean complex feels weak, even though we really do have this weather issue. And part of that, Chris, might be, you think back to our growing season, and we went for almost a 3-month stretch without any rain. The first half, or more than the first half of our growing season, we didn't get any rain at all. But then, come harvest, after some timely rains, not a whole lot, but some timely rains, during pod set, you got guys coming back and saying, wow, I can't believe it, but we have some pretty good bean crops, not too far from our record even. And so you wonder if the market doesn't want to get fooled on that again. Maybe they're figuring, some rains that are in the forecast, depending on the model you look at, could save the Brazilian crop, and that replant, it might save the Brazilian crop. But I don't know. It's really frustrating and dissuading for the bull camp that beans haven't been able to embrace any sort of big weather concern in Brazil.
Yeah, well, it's a real true testament to the genetics and the modifications that we've seen, that drought-tolerant corn, drought-tolerant beans, and it really does make a difference for that plant to be able to hang on for just long enough until it gets that beneficial moisture. We're going to go away and take a real quick commercial break. We're talking with Ted Seifried. You stay with us. Welcome back to Market Day Report. We got the livestocks now trading, and it looks like they're softening pretty good. The December contract kind of holding in. Remember, this is kind of the last end for it, and we're trading right at 170 cash as best I understand. So with us at 169.90 on the futures, that's about as even basis as you can get. The Feb contract showing $1 lower at 169.30, 169 low for the day. April down 77 at 173.05, and the June contract down 50 at 170.80. See what our feeder cattle market was doing this morning. It's a little bit softer as well, down 65 on the Jan contract, 223.40. It's been as low as 222.82. March contract down 70 at 225.05. Out to the May contract down 50 at 234.32. And our hog market this morning, see what it's doing. Kind of mixed, I guess, with the Feb contract at 70.25 up to the April contract down 15 at 76.55, and the June contract down 32 at 91.92. I'd like to invite my guest, Ted Seifried, back in again this morning. Ted, anything special that jumps out at you on the livestock, and especially with tomorrow's big reports coming out?
Yeah, Chris, like you said, they are trading. It seems barely, right? But they are trading. Look, we had a little back and fill after yesterday's strength, and that's not terribly surprising when you have a cattle on feed report coming on, a Friday afternoon, tomorrow afternoon. You really wonder how many people are going to see that cattle on feed report, or if that's something that we'll talk about a week and a half from now. I don't know. But either way, we had some nice strength yesterday. We were taking some of that back. I think that's just some profit taking happening in the cattle. The feeder's really not pulling back very much, and that's a really nice thing to see. I will point out, from a technical standpoint, you have short-term moving averages crossing above each other. The shortest, the 10-day crossing over the 20-day on a live cattle chart. That's the first time since September. That's a good sign. You have a V bottom in cattle. I generally say that markets don't put in V bottoms, with the asterisk that sometimes the livestock do, right? So, seasonally, we have a tendency to go higher. I like the outlook. I think we went too far to the downside. So, yeah, I think that we have some upside potential here in the cattle complex, and maybe even in hogs, too.
And we haven't really seen any slowdown in consumer spending. Whether they can afford it or not, they still haven't stopped the spending aspect of it. And that's kept our boxes really buoyed. 288, 289 is where we've kind of been hovering around in that box trade. Do you think they'll stay supported for the next couple of weeks?
Well, if you're long the stock market, Chris, you really don't have to be worried too much about your expenditures. So as long as that keeps going the way it's going, I feel like the consumer demand will continue to be stout. Export demand, not so much, right? I mean, yeah, we saw almost 10,000 metric tons today, which is actually a good number for beef, a pretty good number for pork at 37,000. But the domestic demand, I think, will remain good as long as we're not going into this, deeper, darker recession, which apparently stock market, dollar index, really everything has shrugged off, and we've gotten rid of that notion, at least for the time being.
All right, good, Ted. I don't know, how much I appreciate you taking the time to be with us this morning. That's Ted Seifried. He's with Zaner Ag Hedge. And Susanna, it's back over to you now.
Thank you so much, Chris. A lot of people going to be paying attention to that report coming up.
Yeah, I think so. It'll be a big one. If they keep 12 million head on feed, that's where we're kind of the point. We've been under 12 million head. When we crossed under that, everybody got worried. Now we're kind of right up at that level again. So another different worry.
Right, exactly. Thank you so much, Chris.